Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over the market today, which was a pretty brutal day in the market today. But yeah, let's just go over all of it together. Discuss what happened today and what we can expect moving into, well, tomorrow to finish off the weekend, pretty much the rest of the month. Don't forget, Monday is an off day. The market is closed on Monday for holidays. So yeah, just keep that in mind. But with that, all that being said and done, let's just jump into a Tesla. By the way, if you enjoyed the video, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below for just $2.99 a month in the description of the video. You can click it, join it if you would like to. And you get access to all my intraday thoughts, posts, updates, technical analysis, options flow, etc. on Tesla every day that the market is trading. So with that being said though, Tesla is going to be closing the day down another 3.5%, unfortunately, closing the day at pretty much 173 per share and 74 cents, which compared to the market is going to be yet another underperformance, with the market decently red, but nothing completely crazy, at least relative to how it feels in the market today. Pretty brutal sell-off today overall in the market. A lot of red today for sure. So let's talk about what this all means moving forward. So let's start off with the daily first. The daily is interesting. So the daily is definitely losing some unfortunate steam here, right? It's definitely losing some levels that, yeah, let's just say we didn't want to see lost rather. So first and foremost on the daily, we lost the 20-day moving average. We lost the 21 EMA, which, isn't really all that ideal. We are entering this, volume point of control area once again, this kind of, 172, 173, kind of, 174, like that general rough 3-4 point vicinity, whatever you want to call it, right? We're pretty much entering it right now. We found like a minuscule bounce so far right here, tiny little wick, but again, nothing too crazy. And pretty much the same wick that we had over here. The next day ended up being pretty okay. So we'll see if this ends up playing out. But I do expect tomorrow to, I'd be surprised if tomorrow is another red day, especially with the market like this. Personally, I'd expect tomorrow to be a sideways, if not maybe a slight green day as of right now. But we'll see, of course. But nonetheless, we are, of course, losing some pretty important levels. Like I said, 21 EMA and, of course, that 20-day moving average. We also have the 50-day moving average sitting not too far below us at pretty much $171 per share, which could be the next like major support to, watch out for that. It seems like we're pretty much headed right for it. Now, the way I look at it is pretty simple though, right? So first, let's go to the 4-hour chart actually really quickly. Go here. By the way, the stock has officially now reset. Remember how I said it was overbought just, 2 days ago, right? It has officially reset on every single metric, the daily and the 4-hour included, which is at least good to see. So it's no longer overbought on those metrics. Let me go ahead and remove this indicator for now. Now let's talk about what we can, figure out from here. So let's remove this thing for now. And the way we look at this is pretty simple, right? Like I talked about yesterday, we have this bullish pennant or bullish wedge, whatever you want to call it. But I also mentioned yesterday how just because it's called a bullish wedge, or for instance, maybe a bearish wedge, whatever, it doesn't mean it has to play out in that, respective direction, like bullish or bearish. It's technically a higher probability, but absolutely not guaranteed. I mentioned this, I think, yesterday and the day before that, right? So make sure you understand that, right? Like, and this is a pretty good example. We clearly broke down to the downside, right? So, clearly it's not playing out to the bullish side. Sure, the probability was higher, but again, nothing is guaranteed, right? So we ended up playing out to the downside, which is not great. We lost a bit of this volume profile on the 1 hour or on the smaller time frame, but this is zoomed in, so don't take too much into account, right? Because as you zoom out, it obviously adjusts, right? So we're pretty much entering this volume profile here right now that we roughly stopped in as of right now on this 4-hour chart, roughly. Now, the issue is with this is the fact that we did drop below this bullish wedge. That's not good, right? Dropping below this bullish wedge isn't ideal. So what I expect personally moving into, let's say tomorrow, maybe Tuesday, is I expect potentially a retest coming up, back up to somewhere about this 177 level, most likely reject and most likely make our way back down even further, unfortunately. Now, again, nothing is guaranteed. Obviously, we can still have this as a false breakdown. I just think now the fact that we did break southwards of this bullish wedge, pattern essentially, right? It increases the probability of the bearish scenario now playing out. And what the bearish scenario is, well, at the very least, come back down to about this 168 level to get maybe double bottom. But especially if we lose this kind of 168-ish level, that most likely means that we don't really get a bounce here. Maybe we get a small bounce here like this, and then we ultimately make our way down even further. And, the chances of us coming down to this low 160s range now becomes, well, substantially higher, especially if we lose this 168 to 167-ish level. That pretty much makes it like a 95% chance. But even just this breakdown alone, it went from just yesterday even being like maybe like a 20% chance to now being like a respectable, man, like maybe 50-60% chance, at least in my opinion, right? It severely increased the probability now that we broke southwards of this bullish wedge, which isn't great. Now, if you remember like a while ago, I was talking about how personally, I think back when we were still retesting these levels, right? Don't forget, this level retest right here that we did bounce off of not too long ago at 167, 168-ish, right? If you take this to a Fibonacci retracement, go like this, was that 0.5 retracement level. Well, we also have that 618 retracement level sitting at, well, pretty much in the very low 160s, right? 161 roughly. So that's the level I'd expect if we lose this 0.5 Fibonacci level, which like I said is about 168, and most likely will come down there. But as I'm sure you remember, even back when we were coming down here to retest that 0.5 retracement, I talked about how technically we can still come down to the low 160s, and it's still, in my eyes, a bullish setup, and Tesla still looks bullish, right? And there's three main reasons. Number one, well, it's still a bullish retrace. As long as we hold that 618 level, in my opinion, this is still a valid bullish retrace, and that really truly will be the absolute optimal entry to go long on Tesla, assuming, of course, that level holds. That's assuming, of course, it either gets there and, of course, also holds, right? There's obviously still a lot of assumptions because nothing is guaranteed. You got to be flexible. Now, like I said, though, even if we come down here, in my opinion, Tesla's still bullish. Now, the second reason is the fact that, well, we could potentially have this actual bull flag setting up. So if you take this line up here, which is the top channel, right, pretty much copy paste it, a symmetrical line roughly, right, and then you pretty much put it somewhere around around over here. You can see we're setting up what looks to be a massive bull flag. Unfortunately, what this means is the fact that we still need another fourth touch point at the bottom, because bull flags usually have one touch point up here, two touch point, three touch point, usually with the fourth touch point followed by 5, and that's usually when you break out on that 5 touch point around here, and then you break out and move up even higher. Like I said many times before, though, again, just because it's called a bull flag and this is going to be a much larger one doesn't mean it has to play out like that. But what it does mean is if this pattern were to play out, there's a damn good chance that we're still coming down to pretty much the low 160s roughly to retest this level one more time, the bottom of the bull flag one more time before making our way back up, right? That is a possibility. Or maybe we just do something else entirely. Maybe this bull flag isn't even the pattern, right? There's also a possibility that the actual pattern being set up is instead a potential inverted head and shoulders pattern, right? We talked about this before, but let's talk about it once again. We have the massive left shoulder here. We have the head here. And now we're still potentially setting up the right shoulder here. This could be enough, but even coming down to about this, 160s, like low 160s area would still be pretty damn good to set up this overall right shoulder that we have set up all the way over here. So that is another possibility. So there's a lot of potential situations setting up for Tesla that are still bullish. I don't think Tesla is completely bearish just yet. I mean, short term, I think it's bearish, but medium term, there is still, potentially even longer term, there is still bullish patterns, bullish potential here. But it pretty much hinges on the fact that we don't lose 160. If we do lose 160, let's go to the weekly chart for this. If we do lose 160, right, that's where Tesla falls back into a neutral state for me. It's not bullish, it's not bearish. Pretty much between 160 all the way down to about this like 145-ish area, which is that green trend line, it's neutral. Why is it neutral? Because it's not bullish or bearish to me, right? It's very neutral until we either get back above 160 or we lose 140, the low 140s, we'll say, essentially below this green trend line. And if we fall below this green trend line, well, Tesla's pretty much bearish, medium to potentially, not really long term, but definitely medium term. Definitely medium term bearish, as we will most likely fall decently lower. As of right now, again, I don't see that happening. I can't see that happening. I'd be pretty surprised if that does happen, but obviously stay nimble and always, at least at the very least, accept the fact that this is a possibility, even though I don't think it's likely. It is still a possibility that you shouldn't completely ignore, right? So that's the way I look at this kind of overall situation right now. Now, while we're on the weekly chart, let's take a look at this weekly candle. Obviously, there's still one more day tomorrow to fix this, but as of right now, a pretty hideous looking weekly candle, pretty much setting up an inverted hammer candle, right? Just showing raw selling pressure, really. The only good things about this is the fact that, well, these three indicators are still okay looking, right? The stochastic still showing some bullish momentum. MACD still flip bullish, and at this rate, it's, unless we get like an absolutely catastrophic day tomorrow, it seems like it'll close a second day, week rather, with a green crossover, and obviously the green bar is getting larger. So that's good, right? Which is why I'm still not overall bearish on Tesla, even though short term it might be a little bit bearish here. And then RSI is still, neutral in my opinion. RSI is kind of neutral. Not really showing too much. It's not really bullish. It's not really bearish. It's neutral. It's neutral. It's nothing crazy. So, but we do want to fix this weekly candle. We definitely want to fix this weekly candle. That's for sure. And you can see if I bring up this, my favorite indicator, you can see we're rejecting at pretty much the exact white line, which is that 20 moving average, roughly. We've been rejecting at it pretty much almost every single week. So we definitely want to be looking to break above that, hopefully next week, if possible. That'll be the play, right? If we can break above that level, which next week will be somewhere around the low 180s, like 183, 182. If we can break above that and start closing weekly candles above this white line in the center over here that we've gotten rejected at almost 4 weeks in a row now, well, that's going to be the play. And that's, I think, where Tesla can really finally start making its way back up to the 220s roughly sometime in June, potentially. I still think that's a real possibility. Like I said, as long as we pretty much hold somewhere within this vicinity of 173 all the way down to 160, right? There's all those levels I just talked about. We can potentially just hold here. We could potentially come down to 168 again and double bottom even potentially, right? And we hold that level again, that 0.5 fib. Maybe we lose that. Maybe we set up the larger bull flag. Maybe we do come down to this overall 161-ish level, we'll say, which is that 618 retracement level. Set up that right shoulder of the head and shoulders pattern, the bullish one. There's still a lot of bullish potential. So in my opinion, don't get scared, right? Don't get too scared. There is still potential here, but obviously, it's important to assess risk. That's the most important thing. Assess risk and understand the situation. So that's kind of the main thing I'm looking at right now. Options flow, nothing too crazy. Pretty slow day in the options flow here. I do have a set as usual to showing only $100,000 in premium or higher. And it's not really showing too much. I mean, there's not, surprisingly, has been too much options activity today. Tesla's only sitting at 8 million, pretty much 9 million in bearish flow, which isn't too much for Tesla really. Nothing really to say for options flow, unfortunately. Very, very slow day. Obviously more puts than calls, but towards the end of the day, and especially right before the market closed, we did get a 250 strike come in, $150,000 in premium, pretty much almost a year out, right? Not too far below that. We also have 30 minutes before the market closed, June 21st. We had a 173.33 strike. Apparently that's a thing. That came in as well. We're also about $170,000 premium. So, a bit of bullishness came in towards the end of the day. So we'll see how that plays out moving into tomorrow. But yeah, the last thing I want to share with you guys is going to be something I found right before I started recording this video that I just shared with my members. Now, this is a pretty interesting seasonality chart, if you will, for Tesla, right? So we talked about how June is by far Tesla's best month, like by far, right? And well, conveniently enough, it makes things a lot easier to be bullish in June when you get this little fall, because then the limit to have technically a green bullish June becomes a lot easier because we were falling into June. So naturally, we potentially get like a bounce into June, and it kind of becomes easier as opposed to a continuation, for instance, of this rally. Anyway, the point I'm trying to make here is the fact that this is showing seasonality, right? And it's saying how pretty much if you were to trade Tesla for the past, I don't know what, 11 years, of the past 11 years, if you were to trade Tesla from May 24th to August 4th. So if you've pretty much just bought shares on May 24th and then sold them August 4th, that seasonality range has been one of, if not the best performing ranges seasonality wise for Tesla, I think, in any single segment possible, right? It's by far its best performing month, which just happens to be pretty much the majority of June, which we know is already Tesla's best month seasonality wise. And this is exactly what it's pretty much showing. So, that's important to know, right? Tesla, its best period of, trading weeks, if you will, pretty much coming up, starting tomorrow, technically. So we'll see how that plays out. Now, there's a caveat here. There's a pretty important caveat, which is this one here. However, the seasonal view of election years somewhat disrupts the beautiful seasonal trend. The election year we are currently in, which of course we currently are in, is the worst year for the seasonal pattern. But with that being said, it's still a positive outcome. So in other words, he's saying how, yes, the seasonality chart for Tesla that does perform really well throughout June, June and July up until August is still positive. It still performs fantastically. However, because we're in an election year, which we obviously are, it's not as good. It's still good and it's still positive. If you just, again, buy pretty much tomorrow, I think it is the 24th of May, and sell, what is it, like 4th of August or something like that, you're still going to be up. You're still going to be up, just not as much as usually, right? So, take that into account as well, ladies and gentlemen. But all in all, that's kind of the information I got for you today. So let me know what you think down below, what you think about it. But ultimately, Tesla definitely breaking some levels we definitely did not want to see today, losing some pretty important levels, I would argue. So in my opinion, Tesla has just definitely turned more bearish than bullish because we did lose certain levels, and that bullish wedge, which again, like I said, just because it's called the bullish wedge, it doesn't mean it plays out in the bullish aspect. We did lose it, which isn't good. So, potentially more pain ahead for Tesla, maybe a small dead cat tomorrow for the market as a whole, including Tesla, but I would be surprised if we do not see a bit more pain potentially next week, potentially going lower. Not looking too hot right now. So we'll see how it plays out, but thanks so much for watching. If you enjoyed, again, don't forget to hit that like button, and I'll see you tomorrow. Peace.